Hello everyone and welcome to my video on Meta, formerly known as Facebook. And I want to use this video to highlight how crazy the market is. I mean, I really believe the market is crazy. I want to start by saying I'm not an investor in a Meta or Facebook uh, because I'm not a value investor, right? And Meta is a stock that is pretty much flat in terms of growth. And I don't think as long as the metaverse does not gain meaningful traction, I think this is a stock that's going to stay flat, hence why I don't invest in it. But this is getting so ridiculous and this is so attractive for value investors. And sometimes it's really hard to not want to become a value investor because Meta right now is trading after dropping 25%, right? It lost 5% in a trading day and another 19% after hours. So after dropping 24%, Tesla is trading at a forward PE of 7. 7. I mean, you're talking about a revolutionary company. Like, this is a big tech company, perhaps the least attractive of the five big tech companies, but this is a big tech company trading for a PE of 7. Like, I cannot understand that. I cannot wrap my head around that. And so, a normalized PE for a company like Facebook to me should be at least a 15, close to the S&P 500, maybe a 18, close to what you would find, in the triple Q, but it shouldn't be a 7 at a forward P. And so that's what the value investor, like if you're a value investor and you look at this, like you're betting that the market will come back to its senses within a year, 2 years, 3 years, and value this company at a PE of 15 or 16, and then with a teeny tiny bit of earnings growth, you could 3x, right? Not investment advice, but you could 3x. I don't see why you wouldn't 3x. Now, I don't invest in Meta because I'm looking for growth stocks. I really love stocks that grow 50% a year. So that's why I'm not investing in Meta. But if you're a value investor, this is getting so juicy. And I mean, buying the indexes right now, buying the triple Q, my retirement, I buy the triple Q with my company. Most people probably have access to some sort of tech index fund. Like if you buy the Nasdaq right now, I mean, this is stunning. This is amazing. Microsoft, Google. I mean, what is going on today? It absolutely makes no sense to me. So let's go and just talk about quickly why Meta's valuation at 7 times earnings makes absolutely no sense, regardless of whether Zuckerberg wastes 20, $30 billion over the next 2 years on the metaverse. Regardless of that, like it makes absolutely no sense. I just can't believe this. I mean, Mr. Market is really manic depressive, as Ben Graham used to say. He's really manic depressive. So what is Facebook, right? So it's Facebook, Messenger, Instagram, and WhatsApp. That's what you're investing in. These are the four apps you're investing in. These apps are leaders in their respective segment. Period. They're leader. I mean, Facebook sure is leader in maybe the older crowds like 50 plus, but Facebook is doing really well in Europe, much better than in the US. In the US, we have a distorted view of Facebook because we think it's like old and nobody uses it. But actually, Facebook's doing really well in Europe and is doing really well with people 50 plus, with Gen X, baby boomers doing so well. Messenger and WhatsApp. I mean, people have different preferences, but I mean that's the standard. That is the standard of communications for most people. That's how you communicate with your significant other typically, or anybody. That's how people take notes, right? Messenger or WhatsApp. The average person takes notes with those. I mean, these are incredibly powerful notes. Note to self, and then Instagram. I mean, Instagram is it's the crown jewel of Facebook. It is the most successful social media right now. It has been for 5 years, and regardless of how people think TikTok is attacking Instagram, TikTok is not yet anywhere near the level of Instagram. I don't believe that at all. I don't have Instagram, but I see it everywhere. People are addicted to Instagram. They use Instagram all day long. I mean, these are meaningful apps. 3.71 billion monthly active users. These are monthly active users, right? They're not just registered and they don't log in. No, they're monthly active users. Imagine that. Imagine the opportunity to monetize that. You know, revenues are essentially flat. And how can you blame them? I mean, at this point, a company like Facebook grows at the pace of the internet. A company like Facebook grows at the pace of the internet. As more people and more people get online, this number will grow, right? As, for example, as Latin America gets online more and more, it's only about 2/3 of Latin America online. As they get online, numbers will be added to this. Same for other regions of the world, right? As they grow, this gets added to this. Like the growth of Facebook, the growth of Meta is the speed of the internet, and so of course revenues are essentially flat because they had an amazing year. During the events of 2020 and early 2021, they had an amazing year. People stayed home, and now it's flat. Okay, but it's going to be flat to growing in the future. It still doesn't justify a 7.39 PE. It makes absolutely no sense. Their earnings, right? The PE, price to earnings, right? Their earnings, it's ridiculous. It's $34 billion in yearly earnings. $34 billion in yearly earnings on advertising. Mostly only advertising. So that's how much money they make. I mean, this is insane. So what do they do? What do they do with the $34 billion in yearly earnings? Well, they repurchase their shares. They repurchase shares at $6.55 billion. And I would argue they've done this very strategically because they had a $25 billion facility to buy back shares, shareholder permission. They still have, on the earnings call today, they still have $17.78 billion left of buybacks. So what do you think they're going to do tomorrow and in the coming weeks while Mr. Market gives a 4P value of 7? Well, they're going to buy back their stock. I mean, this is going to create great return. I have no doubt. I mean, not investment advice, but when the market normalizes, when this madness ends, when the market normalizes, this is a stock that I think will get back to 15, 16, 2x, 3x. I'm not the only one saying that, by the way. A lot of very prominent investors are saying that, like Monish Prabhai, right? I'm not the only one in thinking this. This is ridiculous. I think this is totally ridiculous. Moving on, right? So what are they doing? They're doing buybacks with earnings, and then some of the earnings go to new initiatives, and then the rest is moving capex. They have cost of goods sold. They have SG&A. They're a regular business. They're shifting some of their SG&A and investing some of their earnings towards two main initiatives, which the market is giving them no credit for. So one of them is in AI. They're investing heavily in AI, new data centers, new servers, right? GPUs, networking, neural networks, graphs, recommender systems. This is all the stuff they're investing. Like this is a company that's like on the top of its field. This is a big tech company that hires the best, and they're investing heavily in AI. And people don't understand AI yet, but they will. And AI is what they need to invest in to compete with TikTok, because TikTok is very addictive. TikTok has a lot of AI. It's very easy to edit and create things with TikTok. Gen Z loves TikTok. That's a threat. But they're investing against that threat in AI. And what's the other threat, right? It's Apple. Apple's privacy move that changed the advertising code or the data that could be transmitted from iPhones. Well, first of all, iPhones are only about half of the mobile market. That's an important point to make. So they say this may have been costing them as much as $10 billion. This seems a little high. I think it's temporary. And if you listen to the call, they're building new AI models, AI ad models to not circumvent, because the privacy has changed, but circumvent the impact to revenue, to make sure that they develop new ads. We change that to develop new ads. I don't mean circumvent, but to overcome Apple's privacy change. They're developing new ads, all these new systems that are going to allow them to create more value for their advertisers. That's all. That's what Facebook is all about: creating value for the small business who is about to advertise. And I guess the market, perhaps, I mean, probably not in this market, because I mean, this market's ridiculous right now, so probably not. But in normal times, you'd think they'd be okay with investing in AI, but they're definitely not okay with investing in the metaverse. They hate the metaverse with a passion. And that's why the stock is trading at a PE of 7. But again, I mean, to me, this makes absolutely no sense. Like, even if you agree that the metaverse is gonna die and amount to nothing, it still makes no sense that the stock would be trading this much because they're still investing in the right things. Okay, and they are still buying back shares. And I mean, there is still an expected value for the metaverse. Like, I mean, sure, maybe it has only one chance out of five of succeeding, but what if it opens up, I don't know, $1 trillion market opportunity? That expected value should be reflected somewhere in the stock price. Like, sure, most people think the metaverse is not going to work out, but what if it's just 20%? What if it's just a 10% chance? Well, that should be reflected in the stock price. I mean, come on, but it's not. It's not reflected. So let me move on really quickly as to why I think it really makes no sense to me how cheap Tesla is. I want to talk about. I mean, this is a little bit cynical, but over innovative companies like Tootsie Roll Industries. Tootsie Roll Industries, they make candy, famed American candy. They're trading at 39 times right now, 39 times earnings. The short-term thinking market that we're in bid up the stock because the market thinks they're gonna sell a lot of candy for Halloween, which is in like 4 days. I mean, that's how short term the market is right now. That is how short term the market is right now. That they bid up a company like Tootsie Roll to 39 times because they think they're gonna sell a lot of candy in 4 days, and therefore they're gonna have they're gonna have a big quarter. They're gonna have a big quarter because they're gonna sell candy for Halloween. Can you believe how short term this market is? I mean, this is mind boggling to me. This is mind boggling to me. And I put ironically again, so it's seen as defensive by Wall Street. But they both have brands, and they both have a network. But one of them has a network of distributors, right? Um, and I'm not sure how strong that brand is, but I can tell you that the Instagram brand is a strong brand, right? It's popular culture, you know. Gen Z, put it on the gram, do it for the gram. That's part of popular culture. That's the power. I mean, I'm sure Tootsie Roll was part of popular culture in its day, but that is not the prominent popular culture of today. Like the valuable brand today is companies like Instagram. I mean, it's part of Meta, but you get what I mean. It's platforms like YouTube, Twitter, TikTok. These are the brands of the modern era. Apple. So just for her brand alone, I think Meta should be trading much higher than a company like Tootsie Roll, which is also having a slightly increasing revenue growth, but really, really not much. And then the network effect, sure. I mean, they have a network effect, but think about Facebook's network effect. Like when you have a network effect like Facebook, when you have 3.7 billion people on the ends of your network. That network is an incredible moat that gives so much staying power. Like there is so much staying power for the value of a social media that has 3.7 billion nodes. And you want to think about another example of a network that had billions of nodes? Well, that was the telephone. The telephone had billions of nodes, and the telephone is still around, even though the telephone system is entirely, outdated, I would argue. But it's still around because it has staying power. It has a moat. Like when you see, you know, Instagrams with billions of users, WhatsApp with billions of users, that's a moat that even if Meta doesn't pay attention to the business, and even if the business is the worst, the most hated, that business is still gonna have tremendous staying power. I'll tell you another mode. Think about Craigslist. Has Craigslist ever been updated? I don't think so. And it's most likely still the number one used website for posting stuff, on garage sale or selling whatever. That's because they have a moat. That's because when you have billions of nodes in the case of Facebook, you really, really can't go against it. I mean, you can't compete with that. So they have a moat protecting them, which I think is amazing. Let's move to another amazing thing. $25 billion buyback, right? So they make 34 billion in earnings. They could do a $25 billion buyback each year. At the current stock price, that would be an 8% return. They would be retiring 8% of the shares, like each year. That's more than the S&P 500, not in multiple expansion, like, but in just a pure economic payout, like an actual economic payout. The buyback yields 8%, right? The S&P 500, if you look at the average return of S&P 500, it has had multiple expansion. Like, this is not based on multiple expansion. So this is, I mean, this is a stock that should be trading in line with the market, if not higher than perhaps half the companies on the S&P 500 who do not have the moat that Facebook has. Facebook has no debt, literally no debt to speak of. A few $1 billion. That's nothing to speak of for a company this size, right? How many companies on the S&P 500 are trading with $100 billion, $200 billion of debt? I'm looking at GM. I'm looking at Ford. These companies, which are on paper zombie companies, they do revenue financing. They finance their own revenue, just like GE did. But of course, because they're short-term, old world companies, they're not being beat up like Meta. So I'm really shocked by Mr. Market here. Sorry to rant, but I'm really shocked. Let me move on. Wall Street seems to look at AI investments as a waste, but they're not a waste. There's a high chance that Facebook will be able to overcome both TikTok and both the privacy changes of Apple. Like AI is absolutely not a waste. It is the biggest revolution, and Meta has the status and the performance of any other major player in this world. Their AI teams are very, very good. They're perhaps as good as Google, perhaps as good as OpenAI, Elon Musk's AI team. They have very, very good AI teams. I'll give you a proof of that. I don't know if you saw that, released 2 weeks ago. It's a little show-off project of Meta to show their AI capabilities. But I suggest you go to that website, makeavideo.studio. It's a direct response to OpenAI. They actually beat OpenAI on this, which is Elon Musk's founded company on AI. What is Make a Video? You type a text, 3 sentences, and you get a 30-second video of whatever you type. Horses running on the beach in South America. You type this, and you have dozens of videos that the AI makes. Like, this is an example of neural networks. This is an example of something Meta is able to do. I mean, what do you think when they implement features like that in Instagram? Like, what do you think that's going to do? Like, you could have a creator just take a picture of an old painting, write a little storyboard, 3 sentences, and then Facebook makes a 10-minute viral video about it with its AI, right? I really believe the future of this is you write a whole book and the AI makes a movie based on that entire book. The amount of creativity that is going to be unleashed by AI is without any comparison. It's going to be absolutely insane. And this is a company that is in that race. They are in that race. Not to mention they're an American company. Like, a lot of people criticize TikTok, or actually praise TikTok for being able to compete against Facebook. But I'll tell you one thing, that TikTok's going to have problems with AI. The US prevented the best GPU manufacturers, and GPUs are essential for AI. I mean, look at the revenues of NVIDIA. It's now half data center. Look at the revenues of AMD, same, almost half data center. Like, it's all about the data center. And these next generation GPUs, like the recent GPUs, they're not going to be accessible to Chinese companies. Like, Chinese companies are not going to have access to the top GPUs in the world. They're not going to have access to NVIDIA's next models and to AMD's next models. So within the coming years, as Facebook updates its GPU, Facebook is going to have access to the best GPUs, to the best tech. TikTok is not. So what feature is Meta going to be able to add to its platform to take over and become a leader again? So again, I don't think this is a 10x stock, but I think this is a stock that should be trading in line with the market, which means from here, it should be at least a 3x, because it makes absolutely no sense. This valuation absolutely makes no sense. Let me move on the metaverse. So Zuckerberg, like who is Zuckerberg? Like if you listen to the call, Zuckerberg, every analyst wanted to talk to Zuckerberg. They're like, oh, I have a question for Mark. And then he had other people on the top management team respond to analysts. Like, why is that? Because Zuckerberg does not want to respond to something about the current quarter or to some ratio about their ads. Like it does, it did not pick up any of these questions. Like Zuckerberg is a strategist. He thinks 10 rounds, 20 rounds ahead, like a chess player or like a Go player, right? In China, in Asia. He thinks like a player of a strategy game. He is multiple rounds ahead of the analysts. The analysts, finance folks, they're all about the next quarter. Sacrifice growth, sacrifice the long term to make the next quarter. That is what Facebook should do in order to be rewarded. That would be to sacrifice the future, sacrifice growth to make the next quarter. That is not how strategists think. Mark Zuckerberg, and I suggest you watch the interviews, watch the Joe Rogan interviews with Zuckerberg, watch the keynotes that is made on the metaverse. He thinks 10 years ahead. So he thinks 40 rounds, 40 quarters ahead of Wall Street analysts. Wall Street analysts are thinking about today's quarter. You spend too much this quarter and those earnings are down. It's terrible. The stock trade does a 7p. That's what Wall Street analysts think. But not Mark Zuckerberg. He's 40 quarters ahead. He sees the future. Well, actually, he doesn't see it. He makes it. That's what these companies do. They shape the future. If you see the investments, if you see the inaugural letter for Meta, it's about making this future happen. But when you're aware of technology, when you understand things like exponential cost curves, the speed at which AI moves, the speed at which cameras move, the speed at which technology moves, this is the vision of Mark Zuckerberg, right? So this is the new Quest Pro. It's bulky, but if you remember the earlier Quest, they were much, much, much bulkier than this. This is what? This is 1 inch, right? The earlier ones, they were like 5 inches. They were heavy. You couldn't wear them more than 20 or 30 minutes. This is already sleeker. This is already something that you can wear maybe 45 minutes an hour. But the goal of Mark Zuckerberg within 10 years, right? And he has 10 years, maybe less. It's probably going to happen faster than 10 years, is to move from this to this. And this is a product that he actually released with cameras for social media. It's a side product. But he's very clear about the vision. The vision is to move from this to this. The vision is every pair of glasses will be able to have a computer in it. And at the touch of a button, you can access a virtual desktop, you can access the metaverse, you can access augmented reality, whatever you want. That is the vision. And that vision is possible if you understand the declining cost curves of all of the technologies that are needed to do that, that are most often silicon-based, or the cost of AI training. I could go on. This is the costs go down as you scale. There's so many different things. But that's the grand plan, not the bulky thing. The bulky thing is the product right now. The grand plan is this. But to get to this, you have to go through the bulky iterations. So that's what entrepreneurs do. This is an entrepreneurial venture, right? And so I'm not sure if it will succeed, but if it succeeds, it's going to be tremendous, right? If it succeeds, it's going to be perhaps $1 trillion in total addressable market. I don't see why it couldn't be, right? If it succeeds, if you look at the reasons why developing this, is the whole idea of Zuckerberg is that nothing replaces face-to-face interaction. Face-to-face interaction is the most important thing. Nothing replaces that. And how do you get as close as possible to face-to-face interaction? Well, you put a pair of glasses like that. Let's say you're having lunch on your own at your desk. You click a button, someone on the other side of the world appears with you in augmented reality on the other side of the desk, and you have lunch with them as if you were with them. You're simulating reality. And Zuckerberg has a very realistic view of this, I think, in his description of social media when he talks about, started out with text, then went to photos, then went to videos. And what is the next step beyond videos? That is a simulated in-person interaction. So I think the market is incredibly short term, and Zuckerberg is very long term. And we don't know for sure if this is going to work, but the market is giving. I mean, it's not even giving a positive expected value for this. It's just putting this as a negative. While to me, if it has a 10% shot, it should have a 10% expected value of whatever the outcome of this will be. But the market is so short-term oriented that it doesn't see it, and that's why you can pick up shares of Facebook right now for much cheaper uh, than anybody could have dreamed of. Really, I mean, it makes no sense. A 7p, it absolutely makes no sense. This effort, by the way, is validated by big firms, and so I'm sure people watching, people hating on Facebook may think Zoom is not an innovative company. So I'm willing to even remove Zoom and just focus on the fact that Microsoft and Accenture, which are behemoths, major companies, also believe in this and partner with Zuckerberg. Microsoft is very telling. Microsoft has been developing their HoloLens, which is kind of a related product, and they believe in this. So you're arguing with other big tech companies if you argue against Facebook, which again, I'm not invested in Facebook, but I don't think there is a single way in the world that they deserve a 7p, and this is a value investment, in my opinion. This is a value investment. No, the metaverse investment will not bankrupt Meta. Meta will not get bankrupt because of the metaverse. In fact, if you listen to the call, they said after 2023, the costs will normalize. It's an investment. It's an investment. It's a real option in the future that Zuckerberg is investing in. And I'm not sure you can blame innovators because if a firm like Meta does not innovate, then yes, for sure it will go bankrupt. Look at what's happening to the auto industry right now. They didn't innovate. They didn't think about the next product, and they're not here anymore. The best companies are those that are able to have dynamic capabilities. They're those that are able to pivot. They're those that are able to juggle between short-term objectives and long-term objectives, and to not sacrifice long-term objectives just to make financial analysts happy, which I guess is what this market with this short-term horizon, such a short-term horizon, is what this market would want, just them to stop investing in this. But yeah, I really don't buy into this. I think it's called big tech for a reason. This company is praised and has been praised for a major reason, and I think it will continue to be praised. And so, again, not investment advice. I am not invested in this company because I think there are better opportunities out there. Companies that are currently growing, at 50% a year rates. So that's the company that I invest in. But if you're a value investor, if you're a value investor and if you don't want to take too much risk, I mean, to me, could this really have further downside than a 7p? It's just, I mean, sure, it could, but anyways, not investment advice. But thank you so much for watching, and yeah, sorry about the rant a little bit, but but I really feel strongly about this. The market is getting this one wrong. Please like and subscribe, and thank you for your time. Thank you for watching my channel. Thank you.